a look at the price of the gold and your predictions. So last night we already seen that we saw that spot gold reached 2,450 US dollar per troy ounce, and then
Exactly.
right. So although the Fed had that rate, they're holding the rate. So and Powell was very dovish on how do you see impact of the July FOMC meetings, and how could it drive gold price in the short terms?
So Fed policy has always been my primary focus.
Okay.
They are focusing actually on taming the inflation down to like their 2% target level.
Yes.
And all of it, like I have to like go back to what happened in 2020 when they have to like print it out like the 6.3 trillion into the market to ease the pandemic that time. And then because of that, they need to tame it again because like inflation is going off the roof.
Right. Yeah, I think it's almost
Yeah.
9% at the time.
9.1%. And then that was like in June 2022. So like, yeah, that's what's the base of how they moved into their policy right now.
All right, so let's take a look at this graphic, the FOMC impact on the gold prices. So I'm seeing here, you pointing out there's a 2,483 historical high right here on July 17. And then during the FOMC on the 30th April is 2,450. So tell me about this.
So not only that I do approach to the trade by seeing the FOMC, the policy that been taken by Fed.
Yes.
But this is what I see is like the other way around it is also to watch out over Powell's pivotal statement.
Pivotal
Yeah,
statement, okay.
the pivotal statement means like if they have directions to change the policy.
Okay.
It's like when they cut the rate to ease the market, they put in like 6.3 trillion, and after that they raise the rate, and they aggressively raised the rates for like 75 BPS that time, 2022, June, and then 4 times 75% percentage, and then like that, and up to last year.
Okay.
Last year on July, they are that was like the last raise they put in, but then I was seeing also the statement that Powell gave back in like January 31st,
Okay.
2024. It was like on the FOMC too. And then he said, and the statement of Powell said, we believe that our policy rate is likely at its peak. It means like they are not again going to raise the rate.
But
So they just gonna like pause the
Okay.
rate and then keep it unchanged. So this statement alone, if like you base it on the before pivotal statement, which is here, November 3rd, 2022,
okay.
he also stated that we're gonna slow the rate hikes going forward.
Okay.
So you see the impacts of the pivotal statements. It moves the price of gold high for like minimum 450
So we
US
see
dollar.
like from November of 2022, and then it actually went up
Yeah.
when he said this, and then there's a mark of going up right there.
Yes,
And then
450,
on
and then
2024
this one also. So one way to look at the market is also like watching and listen to what Powell, statements.
So,
like that.
so recently, it's very, very strongly, he said they might actually cut the rate on around September. So what can we see? What might happen right after September, after the FOMC meetings later on September, if they actually cut that rate?
Actually, I was expecting a rate cut last night.
Oh, wow, that's very ambitious right there.
Yeah.
Okay.
But then, as market also expected that they're gonna, starting to cut the rate.
Yes.
Starting on September FOMC, and then I saw like when they take the decisions between the FOMC itself the one way to approach the market other than the pivotal statement is like I'm seeing like every FOMC there's like a sign of the market going down, finding its one lower low, and then finding its one higher high.
Okay.
So every time there's an FOMC, there should be like the movement in the market based on the points and based on the days too. So like what I'm seeing right now here is like we are at the FOMC July, which is FOMC has like 8 times in 1 year.
Okay.
And then we divide it into like 2 segments. Like the first one was like for the one that has projection materials, and the other one is without projection materials. The July one is without.
Okay.
So the movement is quite not so big. It's like only rallying for 10 days mostly, and then based on the data, we're gonna see like in 11 days forward is going to go forward up to test the level of 2,500.
Okay.
If it breaks, so it's gonna be.
So
like
we're gonna see if actually gonna break to 2515. All right.
Yeah.
And then
2515.
what do you see? Like it looks like, is this an indicator it's gonna go down or like
Exactly.
September, October?
So like if you saw the before one, can I go to like the before? So like here, after the pivotal statement, there's always like the correction. The corrections, the total is like 271. So like before these, we have two crises. First one like for the 2001, and then the subprime 2007, 2008, and then the previous one is exactly
the
2020 pandemic, and then they are taming, and then they are raising, and then now they're cutting, right? So like the change of the directions of their policy is gonna push the market going down. So like you said before, what am I seeing if like they're making like the rate cut for this next year, next month, September? Yeah, it's going to like pressing the gold prices down first before. After that, and then it's gonna go up again.
All right, and then it looks like on your notes right here, the year end is gonna be centrally window dressing, and everybody's trying. Oh, there's Imlek too. It's the Chinese New Year right there, which is.
So I saw like I'm saying the market is gonna like breaking the level of 2,500, and up to next year would be around 633 up because of the data, and it's gonna go touching 2,650 by the next June next year.
So if we look at this, the price is volatile. So I mean, like again, there's an indicators like it's railing up, but again, it's correcting itself and it likes up and down. So what's for analysts and trading strategies? What analyst and trading strategy can somebody use on the current conditions right now?
Current conditions like now. Most of the investors right now is like nervous, and they're really nervous into the market right now because of the policy being they've been holding the rate cut since last year, and Fed basically is like 2 years on the tight side, on the tight, very tight side, and so they were expecting September should be the cut. And if the September cut means all the value of like the US dollar will be falling, and then we're going to see that there's a pressure in the gold prices. We're gonna see also in indices like in Nasdaq, and then Dow Jones, and then Asian indices, and then we're gonna see like there's going to be a pressure, but how I do like how I see it, it's like just going to go lower for just a moment of time, because this price is actually you're not gonna see it again.
Meaning it's
by the dip. It's like if they're going to be going to test the 50% level, means you need to like prepare to load it up like by the dip. It's all right. It's like
so.
We have
according to your analysis, it might gonna go down, and it's gonna try the level
again.
at 2023
to 630 to 650 even
and then it's
by
gonna
the end of semester next year.
It's gonna go back
Yeah.
up again. All right. So before I let you go, what are your opinions of like for the longer, your forecast for longer terms regarding the future of movement of the gold prices amid the many conditions? We're talking about the U.S. elections, like what's going on with the Middle East, and then the Fed, and then
Yeah.
all that stuff.
So now we're in the elections in the U.S. And then the thing that we already know that Kamala Harris is like she's gonna replacing, like she's the one who's
Running for Democrat.
running
Yes.
for Democrat. And then what I see is like the only thing that's gonna shake the condition in the market is like if there's another recession.
Okay.
Another recession, like S&P going down, touching, okay, and then like that. And so if that happens, then they need, to step in. The Fed needs to step in.
Okay.
Quantitative easing is gonna be into it again, like back in 2007 and 8, they were putting in like a 5.8 trillion. Now it's like for the 2020 it was like 6.3 trillion, and then the easing for next term is going to be they said it's like 20 trillion, so it's double it. So what we're seeing now is like the potential of you need to protect your wealth.
Okay. So right now it's protecting.
Yeah, protecting your wealth to cover it, with thinking of, taking commodities as like your preference of investment.
All right.
So like what I'm seeing like now is just gonna go a little bit deep.
And then it's gonna.
But then, yeah.
All right, so protecting your. All right, Kezia, thank you so much for being here on See Today talking about this. I hope I'll see you again soon.
Thank
and
you
then
so
we'll see
much
how
for
it's
having
gonna,
me.
On the Fed rate cut.
Yeah.
So with that, we're going for a break. But after that, we'll have more business and economic updates here. So don't go anywhere. Stay tuned on See Today Business.